Hey, what's up? I'm Russ, and here on the Dapper Dividends YouTube channel, we're talking about money, making money, and how we're doing that with dividend growth investing, dividend stocks. And one of the key important things is to buy and hold these companies, and you always want to buy before the ex-dividend date to get that next dividend payment. So, life is really busy for me right now. I got a lot of work going on. I'm officially the father of a high school volleyball player, and I received this comment from Jenny who said a list would be nice. Now, that comment was left on my last video, which was the dividend stocks to buy for August 2022. So here we got the dividend stocks to buy for September of 2022, and we're gonna do it list style because I got to get this out quick. I got this information for you, and I'm gonna be really interested to hear what you think of it in this really abbreviated thing we got going on. And by the way, the link is in the description below to this Excel spreadsheet, and I do intend for next month to have a sortable table on my website as a blog post that you can go to and check out throughout the month, but this will have to do for now. So some of the criteria I used to find these companies were a simplysafedividends.com safety score of safe or better. So these were all rated as safe, meaning there is a high likelihood that there will not be a dividend cut. The current yield above 2%, a dividend yield above the 5-year average, and a PE ratio, or in the case of the few REITs that we do have on the list, a price to AFFO ratio that is below the 5-year, and a low trailing 12-month free cash flow payout ratio, with the exception of Leggett & Platt because it's starting to come down, but I included them on the list anyways. Going ex-dividend, on the first is FedEx. Now FedEx is really interesting. Their last dividend raise was 53%. They've only been growing that dividend for 2 years, and that yield is currently 76% above the 5-year average. And also on September 1st is Baxter, ticker BAX, dividend safety score of 82, 5-year growth streak, and they are 82% above their 5-year average. Now, you may not be familiar with a lot of these, but they can be good for ideas, or if you want to find a new company to research, or maybe grab a few shares of something that you already have to get that next dividend payment. On 9/7, we have ticker FAF, First American Financial, safety score of 81. That yield, not too bad, 3.81%. 11-year growth streak. 9/8 is CME Group, ticker CME, 96, which is very safe. Dividend safety score, only a 2.05% yield, growing that for 8 years. And remember, you have to hold by the ex-dividend date. You cannot buy on the ex-dividend date. So when you see this, like in the case of HPQ, remember to buy before the 13th. So use the 12th as your target and you'll be good to go. So HP, dividend safety score of 74, 3.22% yield. 5-year growth rate, last dividend increase really healthy at 29%. On the 14th, one of my favorites, Merck, ticker MRK, although I am a little bit concerned about the healthcare sector going forward. They get a dividend safety score of 99, current yield 3.18%, which is only 3% above their 5-year average, but they have been growing that dividend for 10 years. A bunch of these on the 14th, we'll go through them. Ticker PB, Prosperity Bank Shares, safety score of 92, 2.9% yield, 22-year growth streak for this company. Their last raise was only 6%, but they are about 12% above their 5-year dividend yield average. Community Trust Bank Shares, ticker CTBI, also a safety score of 92, healthier 4.14% yield, 41-year dividend growth streak, super solid. Last increased at 10%, and they are 16% above their 5-year dividend average. Then we get Leggett & Platt, which I told you they're at about 80%, or 78%, so free cash flow payout ratio, but it is coming down, and they are a dividend king. They just made that. They're 50 years. 4.54% current yield, 70 dividend safety score. 4.8%, not a huge raise last, but they are 23% above the 5-year average. Next, UGI, the utilities. They do own AmeriGas. For those of you like me that grill out here when you see AmeriGas, that's owned by UGI. 99 dividend safety score of 99. So if you're looking for a utility company, this might be a good ad. Current yield 3.64%. That'll pay you 36 cents per share. Next, the dividend growth streak, 34 years, really solid. 4.3% last raise, not huge. They're a utility company, and 23% above their 5-year average. Next is a REIT that a lot of people seem to like, ticker MPW, Medical Properties Trust, safety score of 70, 8.04% yield, so that's pretty high, and it does look like they are able to comfortably pay that. 9-year growth streak. Last raise only 3.6%, but what do you want when you got that big hefty yield? 42% above their 5-year average, so definitely looking like a deal there. And the price to AFFO ratio is 30% below the 5-year average. Moving along, ticker HI, Hillenbrand Industrial Company, is a dividend safety score of 70. Current yield 2.06%. 13-year growth streak. Not a big increase last, just 1.2%, but their PE is 28% below the 5-year average. Next, on the 21st going X is Federal Realty Trust. Now, this is a dividend king, and I believe the only REIT that is a dividend king. Safety score of 70, 4.21% current yield, which is 22% above the 5-year average. They have been increasing the dividend again 54 years. That makes them a dividend king when you increase that dividend for 50 consecutive years. $1.08 is what you will receive, and again, they are a REIT. Next, Medtronic, another company a lot of the dividend growth community likes. 99 dividend safety score, 3.12% current yield, 44 years of dividend growth. They are on their way to being a dividend king. Last raise, a decent 7.9%, and that dividend yield is currently 43% above their 5-year average. So Medtronic definitely looks like a sale right here. I would strongly recommend looking into Medtronic to see if they're right for you. I believe they made the pacemaker. I think they're the company that started out with that jam. On the 23rd of September, ticker NJR, New Jersey Resources. A lot of you might not be familiar with New Jersey Resources. Safety score of 74. Current yield 3.24%. Now, they have been increasing that dividend for 26 consecutive years. Last raise, 9%. Getting down to the nitty-gritty, on the 29th of September, I threw another REIT in there for you. Ticker ELS, Equity Lifestyle Properties, dividend safety score of 86. They have a current yield of only 2.3%, which is a little bit low, I think, for a REIT, but it still beats our 2% criteria. 17 years of dividend growth. Last dividend raise, a very healthy 13%. Next, on the 30th, Fidelity National, ticker FIS, 77 safety score. Only 1 year of growth, so definitely something to keep in mind there. Last dividend raise was 21%, but they are currently 70% above their 5-year average with the dividend yield. And lastly, on the 30th, we have Digital Realty Trust, ticker DLR, 94 with that safety score. Current yield 3.94%, 17 years of dividend growth. This looks like a really good REIT that I am kind of being greedy and waiting for it to get a little bit cheaper, but that last raise was 5.2%, and that current yield is 18% above the 5-year average. Oh my gosh, we made it. We got through the list pretty quick. Let me know what you thought of that in the comments below. What stocks are you buying in the month of September that you're excited for, that are about to go ex-dividend? And speaking of dividends, I want to bring you across the pond. If you haven't checked it out yet, I did a wonderful interview with the European dividend growth investor in this little itty bitty teeny tiny box right next to my head. Do yourself a favor, click on that box, and we will talk to you there.